Hi everyone, I'm Michael Gordon with this week's Economic Insight. Now the news flows have been a bit low-key this week, but it has given us what we need to finalise our forecasts for the June quarter national accounts, which will be out next week. The big one is GDP out on Thursday. Previously we were expecting a flat outturn. We've now revised that to a 0.4% decline. Now what I'd emphasise though is that all of that fall is because of some residual seasonality that's crept into the GDP calculations. What it means is that they will overstate the degree of slowdown in winter, the flip side being they'll also overstate the degree of pickup in the summer. So if we look through that, what are the GDP figures going to tell us? Well, we're expecting a pretty mixed picture. There's some strong conditions for the agri sector, and there are some signs that households are benefiting from lower interest rates. But overall, we're not seeing a lot of upward momentum out of that sharp slowdown that we saw last year. The other one is the balance of payments on Wednesday. Now, there's going to be some interesting revisions to this one. Since the likes of Temu entered the New Zealand market, we've seen an explosion in the number of parcels of goods coming from overseas. But until now, Stats hasn't accounted for the fact that the average value of each parcel has been lower. So they're going to be knocking quite a bit off our import bill for the last few years, and that's going to mean a current account deficit that is still large, but closer to something that's sustainable longer term. Finally, we've put out an update of our views on the housing market this week. We've seen a pickup in demand this year, both from investors and homeowners on the back of lower mortgage rates. But at the same time, there has been an ample supply of homes hitting the market, not something we usually see in this country. The pace of home building has come off its highs, but it's still running at a reasonable level, especially with the low rate of population growth at the moment. So we're now expecting house prices to be close to flat for 2025. And for next year, we've revised down our forecast a bit to a 5% increase in prices. Thanks for watching. See you next week.